I'm going to kind of skim this one, and this is from realtor.com. Don't spell it like I say it because I say it funny. Realtor.com. Struggling rental market could usher in the next American housing crisis. A housing crisis centered on the vast apartment and home rental markets is emerging in the U.S., threatening to send millions of renters into eviction and leave landlords short billions of dollars. A large number of renters have been unable to pay some or even all of their rent since March, when the Rona temporarily shut down most businesses. Many businesses remain closed or only partially open, pushing renters into unemployment and draining their savings. Federal and local eviction moratoriums have protected many of them from losing their homes if they miss payments during the Rona, but the national eviction ban and some state and city protections are set to expire by January or sooner. So renters will be on the hook for months of missed payments, which even those who have jobs could struggle to pay. So again, if you want to go here, go to realtor.com. But here's where it gets really interesting. A study of unemployed workers released last week by the Federal Reserve Bank of Philadelphia, Philly in the house. I don't know why I did that. They calculated outstanding rent debt would reach $7.2 billion. That's a lot of money before the close of 2020. Moody's Analytics estimates that it could reach nearly $70 billion by year end if there is no additional stimulus spending. The economic research firm calculated that 12.8 million Americans would then owe an average of $5,400 for missed payments. So this is that kind of shadow unknown that we don't know about when you talk about, because we talk about forbearance, quite often, and it's going down, but it's still up with some originators. So did you want me to, you think I should hit the earnings department, the other one?
No, you don't have to. I was just going to say that we have two articles that kind of talk about this from different angles, but it's very similar how they talk about it. So CNBC talks about earnings for apartment owners show the pain of urban flight.
Yeah.
And it's kind of talking about the sales of apartments and areas that do the sales of apartments. You're also talking about the rentals and
how that's different though. That's a different angle, meaning people are just leaving, not necessarily they can't afford their rent. They're leaving and doing the urban flight thing and going and finding another rental in, say, Little Rock, Arkansas, where they can work there, but telecommute to Southern California,
or even buying for what they could be in that apartment for renting, or what they could have bought. They could buy a castle in Arkansas,
probably 2 or 3 houses.
Yeah. So I think there's a couple of different ways to look at the information, but one important note, I think, is that you have all these people that are sitting in rentals that may not be able to pay because they still don't have their job. And one of the things we talked about when the Corona pandemic first happened is that we thought that the pandemic would impact those at the lower wage category more. And everyone was talking about how housing would crash. And me and you, Dan, talked about how a lot of those people in the lower wage category aren't homeowners, they're renters. And we said, watch investors, because the biggest opportunity may be in taking over investments that have failed and will resurge after the pandemic and the virus is over and the economy makes a full recovery.
And so we're big enough investor, they can just hold it in their portfolio.
Right. Right now we're sitting at about 7.9% in employment. If that continues, if we don't have any more government shutdowns, I hope you guys voted, then we should make a full recovery and go back to full employment, which is somewhere around 4 to 6%. October of 2009, we were at over 10% unemployment. So we're nowhere near what we were at that time.